Hey everybody, hope you're doing great and hopefully you're having some very successful trades. Today we're going to cover the stock recommendation performance for prep2grow from December 1st, 2020 to February 1st, 2021. All this information will be on our website, prep2grow.com. We'll have this video, we'll have the slides, and we'll have the spreadsheet containing all of our transactions or stock transactions that occurred as part of this period of time. It'll have the buy price, our target sell price, our actual sell price. It'll have all of our trade IDs that you can look up within our system. So it has all the details you'll need to really take a look and drill down into our performance history. So let's just jump into how do we make stock recommendations. We have a lot of videos out there that describe the platform, our big data and AI platform, Grow. This is just covering what we recommend out of that. We have a lot of videos that cover the platform, so I'll reference them within the YouTube comments itself so you can take a look at it. But the net result is that we recommend what we call unfriendly options that have a 95% or greater historical success rate. That just means it's a terrible option. Like if you were to buy that option, you would definitely lose money. It has no volume, no open interest rate. It doesn't have a good option chain. It's just garbage from an option perspective, and you lose money. But it has a very good success rate, so we take those and we recommend them as stocks. The next is we recommend anything that has an 85 to 94% success rate. That starts to get into stock-friendly territory. And unfriendly option territory. So our options, anything that has 95% or less historical success rate, don't buy. The chances of them hitting aren't as good as 95%. And with all the risk associated with options, you want every advantage you can get. So that's why I only recommend options that have a 95% historical success rate. But stock-wise, we rarely miss. And I'll cover this 2-month performance history. Out of 194 stock picks we made, 8 have not sold. So it's a 96% rate over the 60-day, over 194 stock predictions. So we're very good at stocks. Options, we're pretty good, certainly greater than 90%, but it's way riskier, a lot of time, sensitivity, that kind of stuff. But as a stock, you can buy market, ride it out, and do good. As an options, you can't. You need more timing and more methodology applied to it. So stocks are way less risky for anybody that wants to do stock trading. We have a minimum 5% gain per trade. We'll cover that. Usually we exceed it. But if it doesn't have a predicted price increase of 5% or more, we won't recommend it. That's our minimum threshold, is 5% gain. We're going to make some changes. So we're going to recommend every stock that has a 95% or greater historical success rate. That'll now be a stock recommendation. We didn't do it just because it would cause conflicts between our call and our stock recommendations, but we don't have to worry about that. We have some rules in place where a subscriber won't get the same company as a stock at an option. So we'll implement those changes in the next week to 2 weeks, but certainly in the March time period. So this is your stock recommendation strategy. Just one more thing around the upcoming changes. We will have integrations into E-Trade and Ameritrade either end of this month or the beginning of next month or April, where you can do one-click trading is what we call. So you click on it, you authenticate in, it passes all the information into your E-Trade or Ameritrade, and boom, you're done. You executed our recommended trade. We'll spend more time on that as we get closer to the launch of that. But let's talk about our win-loss ratio. There's 187 wins out of 85 active, 195. 96% of those sold with a minimum 5% gain, 4% have not sold. And we'll cover the details around the not sold. Generally, our stocks recommendations are exceptionally good. We rarely miss on them. So if we get into performance-wise, money-wise, so essentially you use, if you spend $1,000 per trade on buying stocks, what would it equate to? The $1,000 actually comes from our subscribers, and that's our average trade size. So that's where that number comes from. We didn't make it up. We want it to be as realistic as possible using information our subscribers gave us. So their average cost per trade is $1,000. So if you spent $1,000, you would average $70 per trade. This does account for the 8 that did not execute. And so if we look at the total gain with the ones that have not traded yet is $13,419.17. So out of the eight, they are down about $500 out of $8,000. So they're down 5% in total. Some are down. One is down, really crashed on us 17%. And one is near selling at 4.2%. So we've done real well. Certainly missed the one mark on the 17.8%, and that was done in Bradstreet's. You can see that in our spreadsheet. But the rest of them have done exceptionally well. Total cost to buy all these are $194,000 since there's so many of them. But we'll cover the timing of this. And so 194,000 is cumulative throughout the 2 months. But if you look at timing wise, you can enter and exit trades very fast. Our average time to sell a stock recommendation is 14 days. But average gain per trade is 6.9%. Again, this is accounting for the 8 that have not sold. Time to gain, again, this accounts for the 8 have not sold. 14 days to targeted gain. 7 out of 8 of the ones that have not sold yet was from December. Now, we made a lot of improvements within January and continued in February, and those improvements seem to be very effective. Only one has not sold, and that was from February 1st. 100% sold from January. So the fixes and changes we made within December got applied real well in January. 100% sell to date for the ones in January. So it was a good month. Time to gain, if we break it out, 47% sold within 10 days, and there was kind of a long tail after that. There was no relationship between success percent or gain percent to time to gain. So you would think that 45 days, you may have a greater gain. It doesn't really work out that way. Our target is 5% regardless. So there's no real relationship between time and return. Just that 14 days was the average. So let's look at the sector distribution. So essentially this is who we recommended. We recommended companies from 8 different sectors. Heavy was finance, then technology, healthcare were the biggies, and then a bunch of other ones such as consumer services and capital goods. But the bulk, finance, healthcare, technology, the big movers is the ones that we have recommended. So we're not focused on any one area. We provide across sectors. So to summarize, good 2 months, 96% is pretty fantastic with an average of 6.7 return. If you'd bought all of them, you'd be up $13,419 at a total cost of $194K. But again, if you look at the timings, you'll be in and out of trades within 10 days. So you'll be able to enter and exit pretty fast. But this is our stock recommendation performance for December 2020 and January 2021. We're really proud of the results, and hopefully you've had some excellent trades through us. Again, everything will be posted on our website at prep2grow.com. If you have any questions, as always, feel free to reach out to us. If not, happy trading and have a great day.